if everything in that perspective is something that's good, you think and you know that it's a really good company, then the next thing that I will look at is price. I will look at valuations. Is the valuations very attractive, or are they pricing it way expensive, or is it priced to a point where it's a good company but it may not be as sulit in terms of buying it? Let's talk about principles and specifics that you must consider and you must look out for when buying IPOs. What makes a good IPO? What makes an IPO that's not relatively as exciting, or something that you should look away from, or something you should not put your money into? Alright, let's break it down one by one. Everything will fall and rise on the purpose of how they are raising money, on what the money is for. What do I mean about this? Number one, the proceeds of the IPO must really go towards expansion. The money must be used to make the business grow bigger, wider, stronger. You want to invest in a company that when they get the money, it will be used to make their company even bigger, similar to what Pure Gold did. Pure Gold did an IPO. The proceeds of their IPO was to build 25 plus supermarkets on the next year where they got the proceeds. Pure Gold had an IPO of 12. After the IPO of 12, Pure Gold hit as high as 55 pesos per share. That's what happens when you have a company that uses its IPO proceeds for good use. So don't just be fooled by the brand. No, there are a lot of companies that had a lot of good brands, good names, popular household names, but their IPO really wasn't for expansion. So don't just buy it just because of the brand. Buy it because you know that they will use the money for something that will make their company grow even higher and propel them bigger and greater into the future. Do not go for companies that are going into debt. I do not like companies whose proceeds of their IPOs will just go to debt repayment. It's a no-no. Of course, debt repayments will allow them to lower their interest rates, lower the interest that they're paying, which in turn will be good for them in the future. But you have a choice between a company that is increasing, expanding, and growing up against someone who is just paying out debt. I'd go for someone who is increasing and expanding. So if you find an IPO that the proceeds of it will be used to pay off their bonds, to pay off their interest, to pay off their loans, I'd personally stay away from it. Lastly, in terms of proceeds, I'm not a big fan also of IPOs who are using the proceeds of their IPO just escape mechanism for a lot of investors, meaning the early investors are selling their shares, and when you give money into that IPO, it doesn't go to the company at all. It doesn't even go to the company's expansion and growth plans. It will just go to the owners. It will just go to the people selling their shares. They're the ones who will make money off of it. They won't be able to expand the money that you are giving for them to grow the company further. So if I had ranked it, I'd place a company that would place a majority, or if not all of the proceeds of the IPO into expansion. Then second, very low, companies that would use it for debt. Then third, the owners will sell their shares and use it for their own, or the money goes to the pockets of the owners. You know that we want something for expansion. Then I will see what will be the expansion for. You have to study also that, is it something logical that the money that they will use for expansion will be something that will really help them? It's something that if they have more stores, they have more branches, or if they're expanding overseas or in provinces, or they're building this and that, it's something that will really affect their bottom line. You want something like that. You want a company that is also strategic on how they will use it, because if they're very strategic on how they will use it, it will also in turn give them a bottom line. You don't want a company who says that they will expand in Africa. You think they don't have a market there. You want them to expand in areas also where they will have a market, or you want them that if they expand, it will highly increase their efficiency, making their manufacturing costs relatively lower, hence increasing their margins, hence making the company even profitable into the future. So that's what I want about it. As I study, I break down the proceeds of the IPO, it would be something that will be very good, and it would make the price of you buying into the IPO very rosy as well. Is the business, is the company well into the economy? The services or the products that they are providing, is it well in line with where the economy is going? Because if it's not well in line with where the economy is going, they may not be as good into the future. You have to remember this: every time you buy an IPO, you will only benefit from what it will be in the future. It's a fallacy that when you buy an IPO, it's cheap. Please remember this. All IPOs are at a premium. All IPOs are expensive. All IPOs are not what everyone thinks it is, that it's gonna go up on the first day. Not all IPOs go up on the first day. Not all IPOs go up. You've seen so many stocks already in the past few years that have really gone nowhere after the IPO. Some of them are even lower than their IPO price. It will always go back to how good the business is. It will always go back to how good the CEO, the chairman of the board, and everyone else leading the company who will make the company run well. It will go back on how they run it and make it good. So please don't be deceived that every IPO will do well. A lot of IPOs also have done their fair share of drops and have not even gone up over the past few years. So that's how I will segment it. I will actually look on how the business is actually running. Now let's try to look at some of the specifics that I would normally talk about during StockSmart's fundamental analysis. Number one, you want a company that's good, growing. You go back to the financial statements. If the digits, the numbers, the ratios are saying that income sales are increasing as well, then after that I would look at the debt of the company. How leveraged are they? Do they have too much debt? Then I would look at their liquidity as well. I would see how much assets do they actually have. Should sales and income not be so good for them to be able to support all of the expenses, liabilities that they have? Do they have enough assets to cover rent? Should things not go so well, do they have enough assets to pay off their employees? Should things not go so well as well? Then I would also look at how efficient they are into their earnings. I would want a company who is efficiently converting the equity that they have into earnings as well. The more efficient they are, the better. If everything in that perspective is something that's good, you think and you know that it's a really good company, then the next thing that I will look at is price. I will look at valuations. Is the valuations very attractive, or are they pricing it way expensive, or is it priced to a point where it's a good company but it may not be as sulit in terms of buying it? There are times naman after the IPO, you really like the company, that it would dip. So when it dips, it becomes relatively cheaper as well. So when it becomes relatively cheaper, that would be one of the best times for you to start coming in. You have to remember, it all boils down to buying a good company and buying it at a good price, and buying it at a price where it will be amazing that you will get a larger margin of return as well. So you must be sensitive about that. So now what I'll do also is this. I'll try to compare against similar IPOs, against similar companies, how they have performed. Will there be any threats up against the competitors that they have? All of this, by the way, will be in their prospectus as well. Huwag tayo magpapadala sa emosyon na, oh, this is a good branding. No, look at the numbers. Does the numbers justify it as well? If you have the chance to attend any of their road shows, by all means go, so you can actually also ask the company in terms of how good their company is, especially for a long-term investor. If this is something that fits your profile, fits the values also that you have as well. Next, companies with larger IPOs, you have to understand, the larger the IPO means that it's harder for it to move up on days during the IPO, because there's a lot of shares moving. It will be hard for it to go up at a very rapid rate. Yung mga stocks that go up very fast, those are the small IPOs. Those are stocks where there's just a small amount of peso value sold. As there's a small amount of peso value sold, it's easier for the stocks to move, and then it will just go up relatively faster because there's just small number of shares are being passed around. I hope this video helps you know. It's the goal, the heart of why I do these videos is to educate as much Filipinos as possible, that you don't get too excited, that you just give in to your emotions, but you decide logically, because I know you're putting your hard-earned money there. The best way to win in the stock market is not just to study, but to process the information properly so you make the right decisions as well. Investment choice is something that you do when it's a well-rounded decision. It won't be a perfect decision. You'll make mistakes still when it comes to trading and investing. But when you do it with confidence, when you do it with conviction, when you do it that you know what you're getting into, that's something no one can take away from you. And that's something that builds until you reach your goals of financial freedom. So that's it for now. Marvingermo, I hope this video helps you trade well, trade strong, trade smart. See you all again soon.